Good evening. Welcome to the SPY Intraday Price Action Analysis on Moving Charts. SPY opened gap up today and pulled back to test the support level of 710.6 and then reversed from that support and made another all-time high today. As we have been discussing in our earlier analysis, SPY is moving towards the next extension level between this swing low and swing high of 721.22 range. So today it closed right around the 61.8 pip extension between this swing low and swing high, the lower time frame swing low and swing high. Breaking above, it will go and test 720 and this 722.5 between 721 and 22, aligning with the pip extension of this swing high and swing low. After breaking out this lower time frame higher high, SPY pulled back for the last 2 days to test this support level of 710.68 as well as the 9 EMA, and yesterday's candle collected liquidity below this lower time frame double bottom and printed a small hammer candle which led another $7 move today. If you look at the intraday time frame, after making all-time high on Monday, on Tuesday SPY gap down below this support and it was just been consolidating between this support which now turned as a resistance and this support around 708, this level for last 2 days. Even though price was getting rejected at these moving averages 9 and 20 and even forming this double top pattern collecting liquidity about 20 EMA and 15 minutes time frame, price could not break below this 708.6 support level after filling this gap, and it also printed a bullish engulfing candle on Wednesday's session and closed about 200 SMA as well as 20 EMM. After reclaiming the moving average levels right before the closure of yesterday's session, it printed this bullish candlestick reversal pattern, a morning star candlestick pattern. A red candle followed by another red candle which capped down and then it printed a bullish engulfing candle with high volume right at the closing session of yesterday. Then today it opened a gap up near this resistance and pulled all the way back down to test the same support level as well as 20 EMA, and then printing back to back 3 candles collecting liquidity below 20 EMA, and then printed another bullish engulfing candle which led the price move from around 714 to 719.5. Here another bullish reversal candlestick pattern setup. Even from here also it moved around $4, 715.5 to 719.5, running back to back green candles. Looking at the hourly time frame, even on the hourly time frame also, after breaking this double bottom, gapping up today and retesting with the bullish engulfing candle at the second hour of the session today, collecting liquidity below 20 EMA and hourly time frame, it moved from 714.5 to 719.5. Earlier in the last 2 days, it was keep giving support at this 709 level, On the hourly time frame, it also collected liquidity below this low. And it reclaimed the 20 EMA on hourly time frame at the last hour of the session yesterday. And we saw this morning star pattern at the last hour of the session. These two candles are the last hourly candle. Looking at the monthly time frame, because today is the last trading session of the month. So on April this month, SPY made 10.5%, that is $68 from the March closer. Last year it took 2 months to move 11%, but this year it just took 1 month to move 10.5%. So support we now have this 715.40 followed by 712.3, then this one at 708.3. If you move to the lower time frame, on hourly time frame, we have this fair value gap as well as this support at 715.3. Breaking below, we have 20 EMA. We can have this trend line also marked to see how price is reacting to this trend line also if it pulls back. Resistance, as we have discussed, we have that 721.22 levels. Looking at Bank of America. So for Bank of America, the 20 EMA crossed over 200 SMA on April mid when it is testing this resistance, and it pulled back to test 20 EMA as well as the support level and printed a morning star candlestick pattern here. These three candles, a red candle and a small red candle which capped down, and a bullish engulfing candle taking support from 20 EMA. And yesterday it printed a hammer candle collecting liquidity below this morning star setup as well as 20 EMA, and today it printed a bullish engulfing candle breaking out this bull flag. And it looks like a cup and handle pattern breakout also. So chances are there for to test 56. Looking at the monthly time frame. So on the monthly time frame also it formed a morning star candlestick pattern. Also collected liquidity below 20 EMA, testing the support similar to this setup. These three candles, which led the breakout of this high and made all-time high. Looking at Disney, so on the monthly time frame, Disney has been taking support of this 200 SMA and printing bullish engulfing candle each time, and it has been consolidating between this resistance of 120 and 82 level for around 4 years now. After breaking this on June last year, unlike sharp red candles, it is looking like a corrective pullback. If it breaks above this downtrend, possibilities are there for even break this breaker block to move higher to test this all-time high of 200. This support is taking at 200 SMA and monthly time frame also aligns with this larger time frame uptrend. This uptrend starts from 1974. It has been taking that trend line support also for last 3 years almost, and 200 SMA. And coming to the current trend on the daily time frame, a downtrend, big red candle followed by a small green candle which also gapped down, and a bullish engulfing candle, a morning star candlestick pattern. collecting liquidity below 20 EMA, and earlier it broke this lower high and formed a higher high. Looks like it is forming a lower high at this support level with this morning star candlestick pattern. Possibilities are there to go and test 107 followed by 200 SMA of 109, this resistance around 110. If we see a 20 EMA cross over to 200 SMA and breaks out this downtrend line, then even it may go and test 115 followed by 124. It has earnings to be released on May 6th, the next Wednesday. RKLB also formed this bullish engulfing candlestick pattern, which we discussed on one of our weekly analysis video. After taking support from 200 SMA, which led the price to break this resistance as well as this resistance of 76.72 to test this resistance of 89. Now it pulled back again to test this level, which is now acting as a support as well as collected liquidity below 20 EMA by printing a hammer candle yesterday. Today it printed another bullish engulfing candle. This hammer candle also collected liquidity at this fair value gap. So possibilities are there to break this 93 and test this high of 99.5 in the upcoming sessions. PEP. So PepsiCo also, after taking support from this previous resistance, it is forming an uptrend and saw a rejection from this resistance level of 159 area. Today it printed a bullish engulfing candle, taking support from this support level of 153.5. Basically, the price is trading between these two range, but today it printed a bullish engulfing candle right at 20 EMA. So breaking this and this resistance of 159 may lead PEP to test this resistance of 168, even break this to make another high. Because the place where it took support is around 61.8 level between this swing low and swing high. So this may be a higher low structure for this uptrend. Looking at the monthly time frame, on a monthly time frame, also BEP took support at this 9 EMA as well as this major price level of 153, which earlier acted as a resistance, then support, and then resistance. In April, it printed a bullish inside bar, retesting this breakout level of 153.5. And at the same level, we have been seeing this consolidation on daily time frame, printing a bullish engulfing candle after small red candles. Today's volume also a little higher than these red candles volume. Thank you so much for watching.